Welcome back to the channel where we break down the most crucial trading patterns and help you level up your trading skills. Today, we're diving into one of the most ominous and dreaded candlestick patterns that every trader must understand, the Gravestone Doji. If you've ever had a trade turn against you unexpectedly, you'll want to pay close attention to this one. This candlestick is often referred to as a trader's worst nightmare. But don't worry, we're going to break it down so you can spot it and avoid it before it wrecks your profits. So, what exactly is a Gravestone Doji? Well, it's a type of candlestick pattern that signals potential market reversal. This pattern forms when the price moves significantly higher during the session, but closes at or near the open. The result? A long upper shadow and a tiny or non-existent lower shadow, resembling a gravestone. It can be found during a bullish trend, and it's often an indicator of a bearish reversal. Traders call it a nightmare because it's a sign that the market has failed to sustain its bullish momentum, and a potential downtrend could be just around the corner. As you can see in this example, the price makes a strong move up, but by the close of the candle, it's left with little to no bullish momentum, which is a huge red flag for any trader in the market. To spot a Gravestone Doji, you need to look for the following characteristics. 1. A small or no real body. This means the open and close prices are nearly identical, or at least very close together. 2. A long upper shadow. The price spikes up during the session, but by the time the candle closes, it has fallen back down, leaving a significant upper shadow. 3. No lower shadow or a very small one. This shows that the bears managed to push the price back down during the session, indicating strong selling pressure. Now let's take a look at this chart. Notice the long wick at the top and the tiny body at the bottom of the candle. This is textbook Gravestone Doji behavior. The Gravestone Doji is dangerous because it often marks the end of a bullish trend. Think of it like the market's way of saying, this trend has exhausted itself, and the bears are now in control. When this pattern appears at the top of a trend, it means that the buying pressure has run out and sellers are starting to take charge. If you're long in a position, this is your warning sign to either exit or tighten your stop losses. Take a look here. This Gravestone Doji formed at the peak of a bullish trend, and shortly after, the price began to plummet. For traders who didn't notice this pattern, the result was a sharp loss as the market reversed direction. So, how should you react when you see a Gravestone Doji on your charts? First and foremost, be cautious. Here are a few tips for managing trades around this pattern. 1. Confirm with other indicators. Always use additional technical indicators to confirm the reversal. Look for things like RSI, MACD, or trend lines to see if the momentum is indeed shifting. 2. Set tight stop losses. If you're holding a position when a Gravestone Doji appears, consider moving your stop loss closer to the market price. This will protect your capital in case the trend reverses quickly. 3. Wait for confirmation. Don't just trade on the appearance of a single candlestick. Wait for the next few candles to confirm the bearish reversal before making any moves. A confirmation could be a red candle after the Gravestone Doji, indicating that the bears are taking control. Here's an example. After the Gravestone Doji, we see a strong bearish candle that confirms the potential trend reversal. This is your signal to start thinking about going short or exiting your long position. Now let's talk about the common mistakes traders make when they see a Gravestone Doji. 1. Ignoring the pattern. Some traders may brush off a Gravestone Doji thinking it's just a minor market fluctuation. However, ignoring this pattern can lead to huge losses. 2. Trading without confirmation. Trading solely on the appearance of the Gravestone Doji without waiting for confirmation is a recipe for disaster. Always confirm with additional tools and indicators. 3. Not adjusting stop losses. Many traders neglect to adjust their stop losses after seeing this pattern, leaving themselves vulnerable to sharp price reversals. In conclusion, the Gravestone Doji is one of the most powerful and ominous candlestick patterns you'll come across in your trading journey. It signals a potential market reversal and should not be taken lightly. Always trade with caution, confirm with other indicators, and adjust your stop losses to protect yourself. If you want to be a successful trader, understanding candlestick patterns like the Gravestone Doji is key to managing risk and preserving your capital. Thanks for watching. If you found this video helpful, make sure to hit that like button, subscribe to the channel, and ring the bell to stay updated on more trading tips and strategies. And as always, leave a comment if you've ever encountered a Gravestone Doji in your trades.